It's Wednesday, September 28, 2022. A very interesting day today on Wall Street, I must say. Dow Jones up about 550 points today. NASDAQ up around 222 points. Markets across the board up today. And why I find it interesting is last night when I went to bed, Dow futures were down, hovering between 150 to 200 points down. We witnessed the 10-year bond yield hit 4%. Today, it was 4.04%. And as I make this video, it's sitting right at about 3.70, 3.71%, somewhere around there. So we, within hours today, went from 4.04% on a 10-year bond yield to 3.7%, all within hours. That's a 30-plus basis point drop, all within hours. Now, I don't know about you, and I'm not an economist, but I find that shocking. How can that happen? Who's buying up all these bonds? Now, do we have the Fed back in here buying bonds? I don't know. Now, what I also find interesting today is as I'm watching some of these financial channels, and we have just been watching these markets just being destroyed. And now today, we have the Dow up, the NASDAQ markets all up, and they're up big. And I'm watching these channels, these business channels today, and nobody is even talking about why they're up. They're just up, giddy, excited, telling all of us to buy into these markets. Everything's back. Everything's going to be okay. Not really explaining why the markets are up. The markets are up because the Bank of England, the Central Bank of England, the Bank of England, pivoted. They reversed course. They're going to be printing money, and they're going to be lowering rates. And we have this hopeism here now in America and in these markets that the Fed here, that the Federal Reserve, Jerome Powell, is going to do the same thing what the Bank of England just did. Now, I don't think that's going to happen, but isn't that strange how the Bank of England can pivot and the effect that it has right here in the U.S. markets and the hopeism that we're going to do the same thing. Think about the ramifications of a pivot and what would happen here in America if the Fed at this point or in the very near future did a pivot. That would be absolutely catastrophic, in my opinion, to the U.S. economy and the U.S. dollar and really the future of this country. But let's get into this a little bit. This article comes from The Hedge. The other reason the Bank of England panicked, 26% of all UK mortgages are variable rate and set for imminent repricing. So these rates, on these adjustable rates in the UK on these homes, 26% of all UK mortgages are variable rates. And they're dependent on the Bank of England's bank rate. And if that goes up, the mortgage rates go up on these homes, and people begin to lose their homes. The latest central bank bailout, ladies and gentlemen, here we go again. This to me shows the weakness of these global economies, the UK economy, and if we do the same thing, it is going to show nothing but weakness. Now, what is this going to mean for the pound? I don't know, but I think that this is going to be a problem for the UK, and it's just exposing more of how weak these economies are and how weak they have been, and they've all been propped up by central banks. And without the central bank, they collapse. How long can this continue to go on? And when do people begin to realize that it's all fake? There's no real economy. It's all propped up by central banks. And the minute the central banks step away, as we are witnessing now here in the US, you see what happens to the markets. They just get crushed. Wolfstreet.com, UK chaos economics fretting over financial stability and contagion after gilts plunge. Bank of England buys bonds. 1.5 trillion pounds in leveraged pension funds needed to be bailed out. 1.5 trillion pounds of leveraged pension funds needed to be bailed out. Need I say more? But we all have this hopeism here that we're going to do the same thing, that we're going to fold and continue to kick the can down the road. Ladies and gentlemen, if this does not warn you to prepare, I don't know what does. Here's another one from The Hedge today. Legendary billionaire Stanley Druckenmiller. We are in deep trouble. I don't rule out something really bad. And, you know, I don't need to listen to a billionaire or Elon Musk or Goldman Sachs or Morgan Stanley. I can see with my own two eyes, just like all of you. You can see with your own two eyes, something is very, very wrong. This economy has been collapsing for years, and we are heading in a very, very negative direction. And we all know that these markets have been propped up. It's all being exposed now. But Mr. Druckenmiller goes on to say, the Fed's attempt to quickly unwind the excesses it itself built up over the past 13 years with its ultra easy monetary policy will end in tears, no doubt. We're going to see a lot of people in tears when this comes to an end, ladies and gentlemen, and things are accelerating. He said, we are in deep trouble. He went on to say, you have to slay the dragon. The problem is the Bank of England demonstrated with its QT to QE, quantitative easing, pivot today. It's impossible to slay the dragon by doing this. Ultimately, every central bank will fail unless you take tightening all the way and kill the dragon. And they didn't. And so I think there's going to be huge ramifications now in the UK. We'll see what happens to the currency and what kind of consequences now we'll see with their economy. But again, the only way they can fix anything is by printing more money. But 26% of the mortgages in the UK are variable rate. It's a ticking time bomb. Ken Griffith says Fed has not done enough, must continue on its path to reset inflation. This is Citadel's founder and CEO, very stern on his beliefs that the Fed needs to be even more aggressive, that we are behind, that the Fed needs to get aggressive here, or we're going to continue to see more inflation here in America. Here's one from Fox Business. Scary mortgage rates, sticker shock forcing homebuyers to walk away from contracts. Broker says, it is official, the 30-year mortgage, 30-year fixed rate mortgage, now 7.08%. That's if you have perfect credit. That's an 850 FICO with 20% down. This is the highest 30-year rate we've seen since December 11th of 2000. We're going back almost 22 years. Just over, now this was interesting, a really important data point here. Just over 50% of the average U.S. household income goes to paying housing payments. This is very, very dangerous when half of your paycheck is going to make the house payment. Means after taxes, you don't have a whole lot of money left. It's going to be very hard to save money when 50% of your money is going to a mortgage payment. Then when you pay taxes, pay the cell phone bill, pay the health insurance, pay the car payment, grocery shopping every week, what's left? I mean, think about when you break it down, what the average person makes and what the average person is spending on a mortgage payment, a rent payment. They've got their cable payment, their cell phone payment, the car payment, the health insurance payment. They're eating. They've got to pay Uncle Sam. They're going shopping. They're buying clothing. what is left for the average person, and how can the average person at this point save any money whatsoever when half their money is going just to put a roof over their head? And you look at the price of food, and by the way, gas station by our house today, super unleaded, over $7 a gallon. That's a Chevron station. I think it was $7.07 a gallon. So we are beginning to see gas creep up in price again. It's going to put pressure on the average household out there. And it's just going to get harder and harder to save money and to get ahead. Here's another article today from The Hedge. U.S. pending home sales tumbled to 11-year lows. Pending home sales fell 2% month over month, pushing the index down 22.5% year over year. It's the 9th monthly decline in 10 months. 7% 30-year fixed rate now, going to be very, very difficult for the average person to buy a home. We must see house prices come down, and they're going to. Here's another one today. Refinances hit 22-year low. This on Fox Business. Refinancing applications down 11% for the week, down 84% annually. Mortgage apps down 29% from a year ago. We are going to see carnage in the housing market. If you're in this industry, in the mortgage industry, if you're a lender, real estate agent, broker, I hope you saved your money, because it is going to be a very dry 3, 4, 5 years for you. The Hedge today, calling the Fed's bluff. They're holding a losing hand. Just to paraphrase through this article a little bit, it made some really good points here. The Fed has talked a big game lately. Many assumed the Fed would fold a long time ago. Many people said the Fed would never even raise rates. Then they did. And they said they would never do it again. And they did. And they said they would never do it again. And then the Fed, went 75 basis points. They said they would never do 75 basis points, and they did it multiple times. It goes on to say the Fed is holding a loose hand, and it is bluffing its way to victory. The Fed has defied skeptics, stuck to its guns, and pressed forward. But at some point, higher interest rates will be catastrophic. It will break things. It will destroy the economy. When you look at the cost now to service the $31 trillion of debt, what the average household now is paying to service debt because of rising interest rates, things are going to break. There's no happy ending here, ladies and gentlemen. If the Fed pivots and reverses course, you can welcome in the new Venezuela 2.0 right here to America. If they move forward as they're doing, continue to raise rates, and they're going to have to do it much more aggressively, because we know that the CPI is not 8.3%. We know it's 17, 18, 20 plus percent. They would have to raise interest rates much, much higher than where they're at right now. They're so far behind. But in doing so, you're going to cause a depression. You're going to cause a massive increase in unemployment here in America. You're going to increase poverty, homelessness, crime. Is going to be a really scary time. Now, again, I don't know which way they're going to go, but right now they're choosing to raise rates. But they could do what the Bank of England did. And watching what the Bank of England did today, and the hopeism that we're going to do that. Look at gold today, up $33. Silver had a nice day. The cryptos had a nice day. This all because these markets are now losing trust in the Federal Reserve, thinking that, hey, maybe Jerome Powell in the Fed may do the same thing. And in doing so, the gold market and silver market see a big increase in inflation, and that's why they went up today. So it's going to be very interesting to see what they do tomorrow. But again, we are heading into a nightmare either way we go. Whether we reverse course or stay on course, we are heading towards a nightmare. So I'm going to leave it there today. Please comment down below. Let me know your thoughts. Will Jerome Powell and the Fed do what the Bank of England just did? Will they reverse course? Will they pivot? Love to know your thoughts on that. And if they do, what could happen to America? What would the consequences be with a Fed pivot here in America? I'm sure the markets would go crazy. They would love it. But how long until something else breaks? How long until we see hyperinflation? And how long till we are officially a third world country in doing so? Let me know your thoughts. I don't see it happening this year. I don't have a lot of faith in the Fed, but so far they have stuck to their guns. They are moving forward, but we saw some hope today, and these markets are looking for any bit of hope. The hopeism is that, hey, maybe in November the Fed will just raise 50 basis points instead of 75. They're looking for the Fed to be dovish in its words, to lower these rate increases and to just phase it out and stop with quantitative tightening, start up with quantitative easing, get those printing presses going, and let the Ponzi scheme start up all over again. And I don't think people quite understand the consequences of running a Ponzi scheme, of quantitative easing and keeping rates to a minimum for years and years and years. Now today we're beginning to see what the result of all that is, and it's getting very, very ugly. But yet a lot of people in these markets, now that they're losing money, they enjoyed the ride up in the Ponzi scheme, knowing full on that this was a Ponzi scheme. They full on knew that the Fed was controlling everything. They didn't care as long as they're making money. But the minute they started losing money, they didn't want to be friends with the Fed. They wanted to fight the Fed. They wanted the Fed now to fold. They wanted the Fed to lower rates, not raise rates. So it's so hypocritical that when, people don't care when they're making money. A lot of these investors didn't care how fraudulent all this was as long as they're making money. But now that the piper has to be paid and the Fed has pivoted in the opposite direction, investors don't like that now. They told you don't fight the Fed. Well, now they're fighting the Fed, demanding the Fed lower rates. It's going to be interesting, and tomorrow should be very interesting too, to see if this rally will continue. But remember, the Dow Jones was nearly at 37,000. We're at 29,000 and change right now. It's been decimated. And without the Fed giving these markets the drugs, these markets are going to be in very, very big trouble. And that tells you and I that it's fake, that the economy is dead on arrival, that all this is manipulated, and sooner or later, it's going to come to an end, ladies and gentlemen. None of this is a result of a booming economy. It's not a result of a booming jobs market. It is a result of 0% interest rates. It is a result of trillions of dollars being pumped into this economy, pumped into these markets. It is a result of the top 1% at the very top of the pyramid getting a lot of money and investing it in these markets, where a majority of the middle class are going broke and falling out of the middle class. 1% of the U.S. population has more wealth than the entire middle class. This thing is broke, ladies and gentlemen. In my opinion, they ought to just let the whole thing implode, and we need to start over. Valuations are completely out of whack. Real estate prices completely out of whack. Stocks, everything is completely out of whack. We don't even know the true price of anything right now because it's been so pumped up. Have a great day. God bless all of you. Look forward to speaking with all of you very, very soon.